Good morning and welcome to The Street on BNN Bloomberg. I'm Roger Peterson. Thank you very much for joining us. Coming up on the show today, Jeff Hall, Senior Financial Advisor at Manulife Wealth, will be joining us for the hour. And in 30 minutes, prices for precious metals, of course, surging. Been up and down a little bit the last little while, but we'll be looking at what that means for Canadian jewelers with Sue Henderson, founder and CEO of Suitables. And we want to hear from you, of course, this morning on First Call. Call us with your questions on large cap American and global companies, and we'll have Jeff answer as many of those questions as he can. That's at the end of the show. The number to call, 1-855-326-6266. We'll open the phone lines in about 30 minutes. And our email address is firstcall@bellmedia.ca. Now, here are some of the stories we're tracking for you in the BNN Bloomberg newsroom. U.S. President Donald Trump is threatening to block the opening of the new Gordie Howe International Bridge between Windsor and Detroit unless the U.S. is fully compensated. Trump claims Canada has benefited unfairly from the project, though the bridge is publicly owned by Canada and the state of Michigan, with Canada funding construction and recouping costs through tolls. The long-awaited crossing is nearly complete and expected to open later this year. Shares of Coca-Cola are off in the pre-market, down about 3% after the beverage giant posted net revenue that missed estimates. Coca-Cola also gave a full-year sales outlook that came in below expectations. On the upside, the company saw continued strength in Coca-Cola Zero Sugar, which grew 14% last year. Coca-Cola has been working to expand into non-sugary drinks as demand for full-sugar sodas has declined. Shares of Ferrari are up nearly 7% in the pre-market. The luxury automaker reported stronger than expected fourth quarter earnings and was helped by higher prices and growing demand for customized vehicles. Revenue rose to 1.8 billion euros, topping forecasts. The car maker also issued an upbeat outlook for the year, signaling confidence despite concerns around global tariffs and trade pressures. And now our top-line story. Air Transat and WestJet have announced a temporary halt on service to Cuba because of aviation fuel shortages on the island. And they are now joining Air Canada. CTV's Heather Wright has more on the devastating impact the U.S. fuel blockade is having on Cuba as the country faces its worst economic crisis in nearly 70 years.
This is just the latest sign of the dire situation unfolding in Cuba. There isn't enough fuel for airplanes to refuel on the island as the communist nation struggles during a deepening oil blockade.
We came to Cuba knowing what to expect. There's some things you'll have every day, some things you won't. I mean, that's a norm for here.
But what has been the norm is quickly deteriorating for the people who live in Cuba, with shortages of food, fuel, and medicine. Air Canada has announced it's suspending services and will send planes to repatriate the roughly 3,000 passengers still in the country. WestJet, including Sunwing, has suspended ticket sales to Cuba and will begin what it calls an orderly wind down of its winter operations there, while Air Transat has issued a travel notice allowing for flexible changes or cancellations. This all comes as Cuba experiences the worst economic crisis in nearly 70 years.
By the typical definition of what we think of as a failed state, Cuba is sort of on the cusp of it.
For decades, Venezuela had been the primary source of oil for Cuba, a source that was cut off when the United States captured Venezuela's president in January. Then U.S. President Donald Trump said he would impose tariffs on any country that sells or provides oil to Cuba, further depleting its sources of fuel. The government has closed some hotels and is relocating guests to save on resources. Fuel sales are being limited while school and business hours have been reduced. Tourism is critical to Cuba's economy, and those returning home worry about ordinary Cubans.
It's just really unfortunate because of the Cuban people, and they have so many shortages there as it is.
Cuba has said it is open to negotiating with the United States to end this oil blockade. Meanwhile, the government is telling its citizens to prepare for hard times beyond what they are experiencing now.
And that was CTV's Heather Wright. Let's bring in our guest for the hour, Jeff Hall, Senior Financial Advisor at Manulife Wealth. Jeff, always a pleasure. Thanks for joining us. There's a lot to unpack with what's happening in Cuba. That island attracts a lot of attention, doesn't it?
Oh, yeah.
What's fueling this? Well, we know what's fueling this one, the oil blockade, but what's leading to that?
Well, it's really the start of Venezuela with what Trump did there. And most of Cuba's oil and all types of fuel come through Venezuela to Cuba. And that's how they run their economy. A lot of their electricity is actually generated with fuel. Now there's no fuel. And just like some of the jets can't make it back because there's no aviation fuel, that's a difficult situation. That island is just going to keep, crushing and crushing and crushing. It already lives in the 1950s. This is going to be a tough one to see how this works out in the end, but it's just going to be a pressure cooker that's only going to get worse in the short term.
And that woman we heard at the end there, you do feel sorry. I've been down there a few times. The people are absolutely lovely, and they're so creative because they have to work with so little. Why is Cuba always seem to have been, I know this is getting into your field because you love geopolitics and everything. Why is Cuba why are they the bad guys to the U.S., even though communism in the rest of the world essentially ended 35 years ago?
Yeah, I think it's that buddy system. They're friends with Russia. They're friends with Iran. They're friends with Venezuela. So it's kind of like the bad boys club. So they've always been kind of put on that perch all the way back to the missile crisis, the Cuban Missile Crisis way back, worrying about Russian nukes there as an example. So they've always had that. That's why Americans can travel there, obviously, for years, though there are Americans in Guantanamo Bay running it.
Yeah.
But but it's been a Canadian hotspot for travel for decades.
Yeah, and that's
like
a
you
huge
said,
thing.
the people are great. They're like MacGyvers. They can fix a car with some chewing gum and elastic and a piece of tin foil, and they keep these cars going for decade after decade after decade. It's truly amazing, but I think they got some really tough times coming, and that's unfortunate.
Do you think this will be enough to bring about, they've been pushing obviously for regime change there. By doing this, is this enough? And can the Cubans even think about doing that?
Yeah, they could. We'll have to see, but it's really in their hands. You don't want someone coming in and totally trying to turn over the country. You have to have it uprise from within. But hopefully cooler heads will prevail all the way around, and the people won't have too many hardships, and they'll find some solutions for this. But the big thing for them is it's all about tourism. If planes they can get there but can't get back out, that's a problem. They got to figure out that jet fuel situation.
That's a lot of money that comes in now. And then from this side, of course, it's a huge, as you said, it's a huge destination for Canadians. The airlines plan their whole winter season probably around Cuban flights. And if they've already talked about canceling flights. Now they're talking about canceling the winter season. What kind of an impact could this have on the airlines?
Absolutely huge. But what it will do is it'll help other destinations in that Sunbelt of the Caribbean, as an example. There'll be other types of countries that will benefit from a redirection of all these Canadian travelers that need their fun in the sun. They'll find another hotspot to go to. So, and the good thing about the jet fleets at Air Canada, WestJet, et cetera, is they'll just redirect the planes to other destinations. So one person's negative will be another person's positive.
But it's also one of the things about Cuba, the allure is it's cheap and cheerful.
Oh, absolutely.
You can get down there, I think, for $1,000 a person, which is a pretty good deal. Will people hesitate then, and then not? And Air Canada, you might see them taking a hit, and WestJet and.
Yeah, especially short term. Plus, you have to reorder everybody. Everybody's already booked. All the hotels that were down there, they already prepared for certain food. All of a sudden, nobody's coming. It's a lot of wastage. It's a lot of problems with that. But like I said, there will be a redirection of those flights to other destinations that will get the benefit of Cuba being kind of locked out and not being a favorable destination. But like I said, hopefully cooler heads will prevail. They get everybody sorted out, and Canadians can go have their fun in the sun.
Could you see Canada if there was a regime change and Cuba opened up? Canada, we've been going there, but do we have a lot of inroads there as well, other than the airlines kind of flying down there?
Not really. Cuba's really closed off. The way they worked a lot of their deals privately there, if someone wanted to open up a Canadian to do some kind of business there, you had to have a Cuban that was over 50% ownership. So you're always at a minority position. So it really discouraged investment from outside. So it's really an island unto itself. But what would help is if they did something with the U.S., it's kind of a new destination for Americans. They might find themselves actually flush with a lot of new opportunity if they were able to embrace Americans traveling there. It's a short distance. They get a lot of activity. So hopefully...
Sorry, go ahead, finish. Sorry.
No, I was just going to say that the opportunity is right there. They just got to reach for it.
Yeah, and the Americans have been able to travel there for the last little while. They have to jump through some hoops, but they can go visit. They can go see Cuba. But it would open the floodgates. But is there enough of a market there? American firms were there before the revolution. Would they want to go back, or is it a bit like Venezuela, where see all the oil companies getting ready to jump back in there?
Yeah, I think you have a situation where there's a lot of companies that are desirous to get more involved with Cuba, but there's that hesitation. Who will the regime be? What will the rules be? What will Trump do? He changes his mind not just day by day, sometimes within the same press conference. So they're not sure, and uncertainty doesn't breed faith, and a lot of people want to put capital there. So they got to kind of sort a lot of that out, clear the fog, and then companies can move in, do their deals, do their partnerships, and make it a more favorable destination for everybody.
But and if anything like that, it will take a while. You're not going to see Dole suddenly jumping in there. Right, that was one of the big ones. I think Dole was a huge one that was there.
For years it was there. And then again, with the regime that was in there, it just made it very unfavorable for certain foreign companies to come there and do business. It was very, very difficult and continues to be to this very day.
And now the Cubans get to pay. They get to be the pawns for all this. Okay, we're going to talk more coming up, but we'll take a look at the markets before the bell. See how things are shaping up on the markets. We'll start with the U.S. futures. And they're off slightly, anywhere from 0.14% to 0.18%, mostly flat ahead of the U.S. economic data released today. Now, the Dow closed at another record high yesterday. The S&P 500, again, flirting with 7,000. And the NASDAQ finished a bit below its record in January. So they're all hovering around or at record highs. Let's check out the major Asian markets, how they finished the day. Look at the Nikkei, another big surge for it today on the post-election euphoria, I guess, if you want to call it that, 2.28%. Hang Seng, most sectors advancing there, and it was up about 0.6%. And the CSI 300 up also by about 0.1%. Heading over to Europe, and a little bit of a mixed bag, but the FTSE you can see is off by about 0.5%. CAC 40 pretty much flat. And the DAX off slightly today. TSX now, and look where it finished yesterday, back up above 33,000. Another big day, largest one-day point gain since last April. And it closed above 33,000. Again, gold and other resource names led the way. Some of the movers. IM Gold and Orla Mining both up about 10.5%. Going the other way, Air Canada on what's unfolding down in Cuba. Taking a hit, 4.5% it was off by. And Vizsla Silver, the silver all over the place right now, it was off by about 12.44%. And looking at metals, they're all soft and down today. Gold, off by 0.3, but silver, that roller coaster, it's down by 0.84%, below $82. And copper, off by 0.75%. Just under $6. Taking a look at oil now, you can see another surge for Western Canadian Select. It was up by 1.35%. It's moving in a multi-day rally. Let's see what WTI is doing right now. It is up again, pushing that $65 a barrel mark. It's up by about 0.5% right now. All right, I guess for the hours, Jeff Hall, Senior Financial Advisor at Manulife Wealth. And of course, Winter Olympics fan, hockey fan. So we're talking hockey. You got to keep your stick on the ice and elbows up in the corner when you're investing. You got it. Is that a good allegory?
Actually, it's interesting because I had the privilege to deal with a lot of the NHL over the last decade. And over the years, talking to a lot of my top guys, we started realizing that building a portfolio is a lot like building an all-star top line. Like it's almost identical. You need a general manager to kind of pick the roster, which is like a financial advisor to help. But then you all have all the different positions there as well. Like a goalie is kind of like your last line of defense. It's like your cash. Defensemen are kind of like a blue chip dividend payer or a bond as an example. And then you've got the forwards there to put kind of scores on the board and points up. And that could be a high growth company as an example. So building a roster for a portfolio is a lot like picking who are the best players you'd want for your ultimate roster on a hockey team or like our Olympic hockey guys.
And of course, I mean, you've got to start with the GM, right? You figure out how do you want to build a team.
Yeah.
Right? Because your goal, you might want a goalie that wanders around a little bit and has a little extra cash, but then you want to stay at home goalie, which, I guess the GM is the start. What are you looking at when you're building that team? It is an individualized thing, isn't it?
Oh, absolutely. But again, just like for you and I, we have our own cap hit, like each team has a cap hit in the NHL. We have a cap hit. How much money do we have to invest, as an example? You have to work within that realm. But sometimes the roster doesn't always work out. Sometimes you get guys on long-term injured reserve. Same for like you do for stocks. You might have a great stock that's just not performing well. It just seems to be wounded. You got to haul it off the ice, at least let it rest its legs, or just deploy it another time. Put another guy out on the ice that's more ready to roll. You can always circle back to another player or circle back to another company you've owned in your portfolio that you love that just isn't putting points on the board, just having an off time. So again, portfolio is a lot like a team.
And then, of course, do you bring the imports in?
Yep.
Do you stay domestic? Do you get some good Canadian boys or Canadian girls? Or do you go European?
Well, that's the best part. With the NHL, as an example, it's just
loving this conversation
you got the league for the females, which is fantastic and really picked up like we talked about before the show, which is great. But then again, when you send everybody to the Olympics, it's just Canada or it's just Sweden, Finland, or the U.S. or et cetera. But when you pick a portfolio, you get the privilege of the whole globe as your arena. You can pick the best players in the best positions anywhere in the entire world to build that all-star roster of the first in line top performers all the way along, whether it's your stocks, your bonds, et cetera. Same back to the players. It's truly incredible, the parallels between the reality of hockey and the reality of a portfolio roster.
An all-star roster is what you're going to build.
Yep.
I mean, and I guess the beauty is every player is available, right? You don't have to go, oh, he took him for his team or he took her for his team. Yep. You've got the options of building them. But how do you balance all that out, though, when it comes to the portfolios? What do you want to be able to do with that team?
More than anything, it's to win. But the most important part with a portfolio roster or a hockey team is you got to be able to pivot. What if you're on a penalty kill? What if you're on the power play? How would you change your roster? But there's special teams. Different players are out for different types of opponents, but also for those penalty kills and the power plays. Same for the roster for the portfolio. Times of year, there's seasonality to markets. Certain businesses do better in recessions. Some do better in booms. So the ability of the coach and the GMs to be able to pivot it around the way. But I'll tell you the biggest secret, and this would be if you and I went to watch the Olympics in Italy right now.
Oh, I would love to go watch
them. Or if
them.
we were down watching the Leafs, one of the things we would do is we'd be enjoying watching the play on the ice. One of the mistakes investors make is they just stare at the scoreboard only. Mm-hmm. So just like we went to see, at least we wouldn't just stare on a scoreboard and say, oh, look, there's a point. Oh, look, there's a penalty. We'd be watching the play on the ice because that ultimately ends up on the scoreboard. And that's so key for investors is not just to look at your stock price symbol every day. What does the business do? Who is the hierarchy of the management of the company? Are they honest and able? Is it a great business? And really get to learn your roster. What are those attributes about your company you like? But are there any Achilles heels or weak spots or blind spots in your team roster for your portfolio as an example? So you have to handle it the same way. But the most important thing for investors is don't just look at the scoreboard. Watch the play on the ice. Because again, if your opponent has the two best players out injured, two players in the penalty box, and it's still 0-0, but you're up 30 shots, it's going to be like, okay, we know how this game's going to go. It's going to end up on the scoreboard, but do the homework, get your roster ready, and watch the play on the ice. It allows you to pivot when you need to in a moment's notice.
Yeah, but a big thing, though, is emotional involvement. Teams want emotional investment, but you have to be able to step back, too, don't you?
You got to be a cool cucumber when it comes to not only just your roster. When do you pull guys? If they're tired legs on the ice, you pull them off as a coach. Same for portfolio. If you got something that's just not working, you might love the company, but it might be time to part ways and bring in somebody else for your performance roster.
And is that the hardest part to do when it comes to building your team?
Absolutely, because sometimes you fall in love with a company, but you got to do your best not to do that. Stay emotionless, use logic, and make those strong choices when you have to make that performance choice, because ultimately people want to grow their portfolios just like teams want to win and ultimately hoist that Stanley Cup or our great men and women over the Olympics. We want them to bring them back that gold.
All right, and have you won the gold?
I've never
as a
played,
GM?
Yeah, as a GM, yes, but not as a hockey player for the Olympics, obviously.
All right, we'll wrap it up there. Our hockey, oh my goodness, our hockey analysis is done now for the day. We'll get back to business now with Jeff Hull, Senior Financial Advisor at Manulife Wealth, to see why big tech CapEx is on his radar and maybe on his team. We'll find out. Time to see what's on the radar for Jeff Hull, Senior Financial Advisor at Manulife Wealth. And right now it's Big Tech CapEx. Sounds like a team. Big Tech CapEx is on your radar. Lots going on with that. Some huge numbers being thrown about.
Well, actually, the biggest numbers in all of history for capital expenditures. And it's interesting because that's one of the first things I look at when quarterly earnings come out. I go right down to that capital expenditures and I say, okay, what are they spending their money on? How much are they dedicating, not just in the rearview mirror, but what's coming? And this last tech amount, Amazon, $200 billion, Microsoft, $164 billion, Google, $180 billion, Meta, $120 billion, Oracle, $63 billion. This isn't million. This is billions of dollars.
Yep.
And these aren't small increases. We're talking like doubling over the previous year. In some cases,
well, didn't one group of them go from 165 million to 400 million last year to 400 million this year?
It's crazy. So on average, they're almost doubling their spending almost every year. But it is an AI arms race, so they have to stay at the forefront. And like we talked about earlier, they have FOMO, they have fear of missing out. And not just the AI war of America and Europe, it's battling China with DeepSeek and all of their AI, with Huawei and the things that they're working on as well. So it's a fascinating field, but there's a lot of interesting things behind the CapEx spending that was important.
All right, what are some of the things behind it then that caught your eye?
Well, one of the things is with capital expenditures, whether a farmer has to buy John Deere equipment to farm, he's got to buy seeds and fertilizer. It means they're spending a lot of money up front with the hope that at the end of the harvest season, they'll get to reap the rewards of the benefit of what they planted. No difference with capital expenditures, but there are companies that have to spend a lot of money just to maintain their companies. Yeah. Usually it's not tech. Usually it's companies that generate electricity that have to send that somewhere, as an example. Also, an ice storm happens, knocks down all their wires. Now they got to maintain, redo wires. So just to maintain infrastructure, sometimes there's a lot of spending. But with the AI field, as an example, these massive data centers are huge and immense. But here's a secret that a lot of people don't know about. You can get a free crystal ball to see into the future because one of the biggest and the gem of AI is NVIDIA. They're everybody's dance partner.
Yeah.
But the blessing people have is NVIDIA is the last of the big tech titans to report their quarterly earnings. So the caboose at the end of the train. They're a month after the Apples, the Metas, the Microsofts, the Teslas, et cetera, that use NVIDIA as an example. So you can look at all the capital expenditures for all the big tech titans, and then a month later comes NVIDIA's earnings. Everybody goes, oh, it's a surprise. They made so much money. They just looked a month earlier where everybody was spending their money. It just sounds like NVIDIA, all the way down the list. So sometimes investors, just by good fortune, can see where quarterly earnings line up. And you get that kind of clearing of the fog even before earnings come out to see how are things actually going? Are companies stepping pedal to the metal on the gas, or are they pumping the brakes? In the case of AI right now, it's full pedal to the metal all the way.
And with NVIDIA, is anybody on the horizon to challenge it?
Not really, and they keep evolving. Like, for instance, the humanoid robots coming out from Tesla, they're using NVIDIA. NVIDIA's going to be in a lot of the self-driving cars that are coming out. So it's not just the data centers. And remember, 14 years ago when I was thumping the drum here about NVIDIA, it was a video gaming chip company.
Yeah.
There was no AI data centers and things. So they have this ability as the world's largest publicly traded company to pivot and adjust their companies along the way so quickly. It's amazing that way. But do remember the longer term future that's coming that's really exciting for all of these businesses. It's not just AI. It's when quantum computers marry the AI.
Yes.
It's a whole other stratosphere of breakthroughs in science and physics and medicine. It's going to be truly incredible with what's coming down the pipe.
You're just excited about that. I want to ask you about Alphabet, though, selling the sterling and Swiss franc bonds and the 100-year note.
Yeah, it's a little longer. I don't know if I'll be around to collect on that one. But you're going to see a lot of companies do this. Disney did this a couple of decades ago. Sometimes you have these companies issuing these very long-term bonds as a way to finance themselves, which is kind of smart because like a company like Alphabet, they've got tons of money in the bank. They don't need to finance anything. But if you're going to pay a dividend, Apple does this with Ireland as an example. If they repatriate a bunch of money home and go to pay it out in a dividend, they're going to pay a bunch of tax to pay a small dividend when they can borrow at less than 1% through their bond and just pay the dividend thing. So there's all these different ways they can maneuver financing around that benefits them, even if they don't need financing. Sometimes it's worth dipping into that field. And a 100-year bond is kind of interesting because it's long-term. And for those that want something like that in their portfolio, that could be generational. Could be interesting.
Will there be interest for that, do you think? I mean, they had huge interest for the $20 billion that they put out. They got, I think, $100 billion worth of orders for it. So will there be interest in a 100-year?
I think so. I think you're going to see it sell out, actually. And it might even be oversubscribed for. And again, they can adjust the amount up and down depending on the interest level. But I think it's kind of interesting. And once Google does it, other people are like, that's not a bad idea. You'll probably see other people join the party and have something similar. Maybe not a century-old bond coming for maturity, but maybe something shorter, maybe even a 50-year as an example. But you see other companies that could use that as a novel way to finance their future.
Any concern that this is a bad sign?
I personally like to see no debt at all times. I prefer to see no debt for any reason. But there's a lot of companies that are seeing an opportunity right now, partially because of the big, beautiful bill, as it's called under Donald Trump, is now companies can write off 100% of their capex in the year in which they allocate money for that, versus say depreciating over 10 years, depending on the type of spend. So that's a big difference. And even citizens now, with the big, beautiful bill, as an example, in the States, if you're buying an American car or truck and you're financing it, it's 100% tax write-off for all the interest that you're paying because you're buying American. So you can start to see these little little silos of incentives that come along that could be very interesting, both for investors and sometimes for consumers.
Okay, we'll wrap it up there, but still ahead. Prices for precious metals surging, dipping, they're doing all kinds of things. So what does that mean for Canadian jewelers? And of course, our phone lines will open soon for our first call segment, 1-855-326-6266. Send us an email, firstcall@bellmedia.ca. Well, there's the legend Gordie Howe. And of course, we're going to see the bridge in a second that's on its way. It's actually completed now. This is from the summer. This is the Windsor-Detroit Bridge between Ontario and Michigan. U.S. President Donald Trump threatening to block the opening of the new Gordie Howe International Bridge unless the U.S. is fully compensated. This is what he's saying. Now, Trump claims Canada has benefited unfairly from the project, though the bridge is publicly owned by Canada and the state of Michigan, with Canada funding construction, and it will recoup costs through tolls. Now, the long-awaited crossing is pretty much complete and is expected to open later this year to help alleviate some of the massive traffic flow across that bridge. That the Ambassador Bridge that's in Windsor, Detroit, it is one of the busiest crossings in the world. I think about $2 billion a day, if I remember correctly, goes across that bridge. Shares of Organogram Global are up in the pre-market. The Canadian cannabis company posted first quarter revenue that came in below expectations. However, it swung to a profit and reported net income of $20 million compared with a loss a year earlier. It's up about 4.4% right now. The CEO says the profit was mainly due to higher valuation gains tied to shares held by British American Tobacco. Shares of BP are falling in the pre-market, off by 3.8, almost 4%. The energy company is halting share buybacks as it faces increasing pressure to deliver on its turnaround. The UK-based company also plans to extend cost cuts through the end of 2027. BP is now the only one of the top 5 oil majors without a share repurchase program. On the upside, the oil company's fourth quarter profits came in line with analysts' estimates. And taking a look south of the border at the markets, you can see they're pretty much a wash right now. Slightly in the red, but hardly worth mentioning at this point. You can see the Dow in record territory again, up above 50,000. The NASDAQ pushing up towards its record, even though they're all down right now. And the S&P 500 is also flirting with 7,000. In a Truth Social post, President Donald Trump said he would start negotiations with Canada over the new bridge connecting Michigan and Ontario, threatening to block its opening until the U.S. was given compensation and ownership of half of it. For more on this, we're joined by Bloomberg's Derek DeCluet. He's executive editor for Canada at Bloomberg News. Derek, thanks as always for joining us. Is this Trump being Trump? Are there some realistic concerns that he's brought up here?
It's kind of hard to know exactly what his concerns are, other than he's been a bit exercised about Canada lately. He was upset about the China autos deal. It appears he was kind of annoyed at Carney's speech in Davos. But the confusing part is that he's asking for compensation. It's not totally clear why, because, of course, Canada paid for this bridge. This is more than $6 billion Canadian project. It was totally funded by the Canadian government with the idea that the tolls will repay it. It actually, there's already an operating agreement between Canada and the state of Michigan where Michigan has sort of joint ownership of it. We learned that from the governor's office last night. So the U.S., or at least a U.S. state, already has some ownership here, and it's not totally clear whether exactly what more Trump wants.
Did I see something about this? He's upset about we used Canadian steel for this, but that was all part of the agreement. And his government, the first Trump government was involved in putting this deal together.
That's right. I mean, there's long been provisions in the U.S. that major infrastructure projects should have some sort of Buy American provisions to them, but this one looks different because, as I mentioned earlier, the Canada paid for this. I mean, there were all sorts of political reasons why that happened. That the Americans didn't want to fund it. This was a sort of project an idea that dates back sort of decades. That you needed to have a second span to supplement the Ambassador Bridge. It's too important a trade corridor just to rely on the Ambassador Bridge. And Canada really wanted it, so under the Harper government agreed that we would put all of the upfront costs there. Now the bridge is done essentially. I mean, I was driving through Michigan last summer, and there are already signs sort of direct you to it. There is a Buy American thing, but of course Canada paid the bills, so Canada had a lot of say in how it was constructed.
And we're also hearing from Michigan politicians about this who aren't siding with Trump.
That's right. I mean, one thing that's been a little bit lost in this trade war is that Michigan's actually a major exporter to Canada, and there are signs of strain within the Michigan auto industry and the Michigan manufacturing industry. And that may be partly related to the tariffs and the counter tariffs that have happened since this all began. The governor of Michigan last night, her spokesperson told us that they want to cut the ribbon, and this is really something of a non-issue because there's a bridge that's been built. It's a good bridge, and it should be opened. That's Michigan's point of view.
And I just want to throw in one more thing. Apparently, he was talking in this. He started bringing up about the American our boycott of American liquor. That was part of his anger about this.
That's right. I mean, it was quite a long Truth Social post, and there were a number of complaints attached to it. One, of course, was the fact that Ontario and other provinces still are not selling U.S. booze. That's been going on for almost a year now since the trade war started. He also complained about dairy tariffs. Of course, that's a long-standing sticking point for the U.S. administration is the tariff rate quota system and the supply management system that essentially limits U.S. exports of dairy products into Canada. So there's sort of a list of grievances by the president there, and he's holding up or wants to hold up the opening of this bridge until the result.
Okay, Derek, thanks as always for joining us.
Thank you.
Bloomberg's Derek DeCluid. And we'll have more coming up on BNN Bloomberg after the break. Canada is pursuing free trade agreements with several countries and intergovernmental bodies amid the reorientation of global trade and supply chains in the wake of U.S. tariffs. Canada's Minister of International Trade, Maninder Sidhu, spoke to Bloomberg's Daybreak anchor Lizzie Burden from Singapore. Take a listen.
It really speaks to, our focus and our goal of doubling non-U.S. exports to the tune of $300 billion. And what does that mean? It means more opportunities for Canada here in the Indo-Pacific, in Asia, but of course it means more opportunities in Europe for Canadian exporters. And so as we lead up to it, there's, if you look at how fast Asia is growing, they need more energy. With the data centers popping up everywhere, they're looking at Canada for that energy, but they're also looking at Canada for food security in terms of agriculture goods, but also critical minerals. As you know, Canada is resource rich in that. And so at a time when you're seeing a lot of ruptures in the global trading system, Canada is seen as a reliable, stable partner. And those are the phone calls that we're getting, is that we want to do more with Canada. And you've heard that from the Prime Minister's speech in Davos when we were there together, was about middle powers coming together and really respecting rules-based trade and pushing forward.
OK, loads to unpack here. You mentioned energy. What have you been hearing on your travels about appetite for Canadian exports like energy specifically?
Yeah, around LNG is what I'm hearing. Currently we've got 5 different projects in various phases of development. it was a milestone moment for Canada with our LNG Canada 1 project in June, our first ever large-scale LNG shipment going to Asia outside of the U.S. And so that speaks to our diversification efforts. How I'm going to get to the $300 billion target is obviously through energies. And so you're seeing that those projects are being built, they're being developed. But we're fast-tracking many of those projects through legislation that we've changed in June. Canada is now building at much faster, much quicker speeds than we've ever done in the past. And so as Asia builds, as they build data centers, as they grow year over year, you speak about India, 6, 7, 8% growth year over year. They need 70% more energy by 2040. Guess what? Canada's well positioned to serve those markets.
And give us a sense, Minister, of how much Singaporean appetite you've seen to invest in Canadian ports, for example. Have you had any meetings around that?
Yeah, absolutely. I mean, when you come back to our strategy and our take on hitting the $300 billion of exports, additional exports, we're going to need to add capacity at our ports. And so we're doing that. We've got a $5 billion trade corridor fund as a federal government, but we're also working with partners. I've met with PSA, we've met with GIC, Temasek. They are all comfortable investing in Canadian ports, in Canadian infrastructure projects, and there's conversations to do even more in Canada. And just in the Gulf region, I was there a few weeks ago. They've committed to doing about $70 billion of investments in Canada, in infrastructure, in mining, in energy projects. And so we're building up capacity, and we're welcoming investments from all around the world.
And what's the latest on the Canada-ASEAN FTA that Prime Minister Mark Carney pledged to finalise this year?
Yeah, Philippines is now the chair of the ASEAN, and we're continuing to have conversations with the Philippines to get it through. Of course, there's many partners, as you know, over 10 partners in the ASEAN region that we need to continue to engage with, continue to explore opportunities. But we're having active negotiations. Our negotiators are in Jakarta this week having their round of negotiations, and we'll continue pushing forward. The Philippines has made Canada one of their priorities as the chair, and so we'll continue engaging with that. But this year alone, since you asked about FTAs, free trade agreements, we've got a handful that we're moving forward on with India, Philippines, Thailand, UAE, Saudi Arabia, ASEAN, Mercosur. And so you see there's a lot of work ahead of us, but I think the appetite is there from many of our partners around the world to make sure that trade works. Just in the past 9 months alone, we are moving really fast at record speeds. We typically sign one agreement a year. In 9 months, we've done multiple agreements with the UAE, with Indonesia, with Ecuador, and many others. And so there's an appetite there to do more with Canada. As I said to you before, it's about reliable, rules-based trade, and Canada stands for that.
You're a busy man, Minister. Which of those deals is closest to the finish line?
So we just completed Indonesia, Ecuador, and the UAE. We're starting with India in the coming weeks. Philippines as well. It was something that we signaled when we were in Malaysia not too long ago. But of course, we're going to continue moving forward. Mercosur is another one of those important trading partners. But again, when you're dealing with multiple countries, you need to make sure you match their speed and energy. And we're going to continue to have those conversations to push forward.
And Canada signed this deal with China to cut tariffs and attract Chinese auto investment. Of course, that drew the ire of President Trump. Coming back to my original question, Minister, how is Canada balancing the upcoming USMCA talks with your push to grow non-US exports?
Yeah, when it comes to the U.S., look, they're our number one trading partner, will always be an important trading partner to Canada, and those discussions will continue. There's another minister, Minister LeBlanc, that's in charge of Canada-U.S. relations. My focus is on international trade diversification, and so I was with Prime Minister Carney in China a few weeks ago. It was to make sure that we're exploring opportunities, but also to work through some tariff challenges that we were having in the agriculture sector, and we were happy to come in with an arrangement to give our roughly $7 billion of agriculture products preferential access to the Chinese market. So resolving that was very important, but also unlocking opportunities around electric vehicles. And so we're going to be allowing up to 49,000 vehicles into the Canadian market with the hope of joint venture partnerships, between Chinese and Canadian companies to build those EVs in Canada. We're a large market. Canadians consume or they purchase about 1.5 million vehicles every single year. They're asking for more options, but it's not just with the Chinese. We had the South Koreans there last week. I hosted Hyundai. They're looking at opportunities in Canada. And just earlier today, we had the German Minister of Economy visit Canada to talk about some type of economic cooperation between Canada and Germany, but also to explore cooperation around automobile manufacturing. And so this is a conversation that's happening with many countries. And why is that? I think it's important to mention is on the mining resources, we are heavy resources in terms of what we have. We're the only country in the Western Hemisphere that have every single element to make an electric battery. And so I think it's important we have those conversations. And this is why automakers are looking towards Canada, and we welcome that.
Still ahead, we'll take a look at some of the notable analyst calls and recommendations moving the markets, including Coinbase. Let's take a look at some of the notable analyst calls and recommendations. Coinbase Global is falling in pre-market trading after JP Morgan cut its price target on the exchange by 27%, citing lower crypto prices and trading volumes. You can see it's off by about 2%. The price target was lowered to $290 US from $399, with the overweight rating maintained. Analyst Kenneth Worthington sees the current crypto operating environment as, quote, less constructive, adding that they expect Coinbase's fourth quarter EPS to show a significant year-over-year decline due to lower crypto trading volumes and market capitalizations. Shopify is upgraded to buy from neutral at Nathanson, which sees strong long-term prospects for the e-commerce platform, including from AI analyst Michael Morton, who says, quote, what's truly exciting about Shopify is the long-term opportunity presented to the company by the growing consumer adoption of conversational commerce, adding, far from being threatened by AI, we expect Shopify to benefit from it. The price target set at $150 US from $122. You can see it's up about 4.25% right now. When we come back, Jeff Hall, Senior Financial Advisor at Manulife Wealth, takes your questions on First Call. All right, time for First Call and first email as well. And this one comes from Kip with the announcement of Alphabet bonds. Should I get involved? And we've been talking about it all morning, and they just came out. $1 billion for that 100-year bond, and they drew to £9.5 billion pounds. So they were offering $1 billion for the 100, the first offer, and they got $9.5 billion worth of bids for it. So people want it.
Yeah,
100-year.
I don't know if people are more optimistic on Alphabet, its parent of Google, or at their life expectancy of the person buying the bond. I don't think you and I are going to be here in 100 years from now, but
I think safe guarantee.
I think it's an interesting opportunity. Should someone be involved? I'd be more interested in being involved with Alphabet. That's the parent company of Google. They own 100%. YouTube, the two greatest advertising properties in the world that way. They own Waymo, the self-driving car company. They own and control the Android operating system for phones like Samsung and BlackBerries, as an example. So they use the Android operating system there. But most important, there's a little secret opportunity if you own Alphabet. You actually own 7% of SpaceX, which will be going public this year, at probably anywhere from $1 trillion to $1.5 trillion. It's about $100 billion worth to Google because they were the first investor way back with Elon Musk when SpaceX first started. So Alphabet's got this kind of prize and a number of crown jewels within its empire. I think it's a great stock. Would I be care about the bond? I'm more interested in what's Alphabet going to do with the money from the bond. That's more interesting to me. But for this gentleman that's written in, I'd say look at Alphabet as a stock and a business. It's a great one. Lots of opportunity there for a company that's not only the second largest publicly traded company in the world, it is the most profitable company on earth right now. Just finished a $400 billion quarter. It's rather amazing.
But 100 years is a long time. Will they be around? I mean, the alphabet's been around for a while, but will Alphabet?
I guarantee it'll probably be around, but who knows what it'll look like then. We'll be way past quantum computers, we'll be on Gemini 88 by then or something. But the next 100 years, I wish I was around to see it. It'll be very exciting, and I'm sure Alphabet will be somehow part of all of that.
Hey, with AI, we might be. We might be.
That's true. We can, with Elon Musk and Neuralink, maybe we'll be downloaded into a data center somewhere.
All right, let's come back down to earth and have something real for this email from Shane. Can I please get your guest thoughts on Coca-Cola?
Coca-Cola. So Coca-Cola, interesting company. I've owned it on and off over the years, not more recently. They serve over 1 billion refreshing beverages a day to the human race. They have the second largest truck fleet in the world. This is an interesting business. It's basically flavored water, and their roster of brands, from Dasani bottled water, Minute Maid orange juice, Sprite, Fanta, obviously the Coca-Cola products. There's over 100 different products around the world, tempered to the local tastes, as an example. In Costa Rica, there's like Tutti Frutti, which is their kind of fruit punch. Japan has a lot of ginger and a lot of their kind of pops. Fascinating company. Price to earnings ratio 25 right now. Its 1-year gain is about 21% on the market. Year to date, about 12.8. Interesting business, but most importantly, people that use Coca-Cola have used it their whole life. I think it's a decent business. I'd look for something a little more exciting out there, but it depends on the person and what they're looking for. But I'll give you a quick fact about Coca-Cola most people don't know, is they are responsible for today's image of Santa Claus that was done back in the 20s. It's now, this large, rolly gentleman in a red suit, probably because of the diabetes he got from drinking Coca-Cola.
I wonder now if they'll rebrand with so many people going away from sugar. And sugary drinks, will they rebrand Santa as being more svelte?
Well, it depends if he's on Ozempic or not. We'll have to see. So,
Modern conversations. All right, Jeff, thank you as always for joining us. That is it for us here on The Street. Thanks to Jeff Hall, Senior Financial Advisor at Manulife Wealth, for joining us today. Andrew Bell's up next with The Open. The trading gets underway in about 30 minutes from now. Have yourself a great day.